We're live with Andrew. I was on a Spaces earlier, and I completely forgot that, of course, that I was going to do this 9 a.m. with Andrew. I wanted to pick Andrew's brain because he had tweeted very cryptically just the words Wells Fargo and Morgan Stanley. So I wanted to get a little bit of a read on Andrew as to where these ETFs were going from the kind of the inventorying of getting these things ready on platforms uh, like Morgan Stanley or Goldman, which have not been which do not currently offer them to their channels.
Well, they offer them at the highest level of their channels, right?
Right.
So if you're at Goldman and you've got $100 million long at the firm, you're going to be able to ask, "I'd like to be in a Bitcoin ETF." They're going to take notes. They're going to probably have you sign a document and then basically say, "Okay, we'll give you access to Bitcoin ETFs."
Right.
Same thing with Morgan Stanley. They've got different levels that put you in a special area of their firm. So if you've got more than 25 million long at that firm, you're in their PWM sleeve. And again, you can ask for the Bitcoin ETFs. They'll make you sign some sort of disclosure form that makes the trade quote unquote unsolicited. And then you'll be able to purchase, whatever level of Bitcoin ETF that you want.
Okay.
But those walls are about to come down, right? There's been meaningful adjustments and change in the narrative over the past 2 weeks, not only internally at those firms, but then just the larger narrative associated with what are the market and political based wins associated with the way that the wind is blowing for those firms, right? So you have an increased interest in making these products available to the entirety of the customer base, and then allowing advisors to have meaningful conversations about allocation in portfolios associated with Bitcoin as an asset class. That's markedly different than an unsolicited order made by a private wealth management client, which is less than 10% of the clients that exist at these firms. So you're making it available to another 80 to 90% of folks that don't have access to it currently in a way that makes it easy for them to purchase the products, right? So let's do an inventory of the quote unquote tailwinds now associated with these products. So internally, you have both of these organizations that are, for all intents and purposes, racing to the end of this month, early August, to make that adjustment internally to their policies. Then you have, mid-July, so we're coming out of the sell in May and go away movement down in volumes. That those volumes are now going to start to pick up. So what do you see happen when those volumes begin to pick up post July 4th week? You see Larry Fink in person on the desk at the CNBC morning show with Jim Cramer and David Faber. For all intents and purposes, pounding the table on Bitcoin as an asset and Bitcoin ETFs, making it clear that his adjustment in how he thinks about the asset class is significant and should be listened to. That this is a significant, meaningful financial asset that exists now in the world of financial assets, right? And those guys agreeing with him. Okay. So you have a change in the political discourse as the political winds have meaningfully changed. I don't think we need to talk too much about that. That's obvious
Do
to
you think
everyone.
that these two things are related?
I think they are related. I think
Okay.
finance and politics are very related, oftentimes. In fact, the financial sector is oftentimes the biggest contributors to political parties, no question about that. And so you're seeing um, huge money men and money centers moving towards Donald Trump, and even those that don't move towards Donald Trump have stopped contributing to the other party and the other candidate. They have frozen their contributions, right? So if that's the case, and you now see think about this for a second, because I haven't gotten to this third part of this narrative that's adjusted. I don't think anybody would argue with us in a very meaningful way that Donald Trump is probably the most well-known person on the planet. Doesn't mean he's the most popular. It just means he's the most well-known person, right? His name is probably the most well-known. The most well-known person on the planet is going to speak at the Bitcoin conference next week. Has everybody taken inventory of that reality? Like, the biggest person that spoke at the conference in the last 2 years was like Robert F. Kennedy Jr. and maybe Michael Saylor. Well, nobody knows Michael Saylor outside of the Bitcoin world in any meaningful way, other than they look up videos from 10 to 15 years ago when he talked about you should buy Apple. And Robert F. Kennedy Jr., yeah, he's well known because he's a Kennedy and he was there last year. But Donald Trump is galaxies more well known than those folks, and he's going to be at the Bitcoin conference.
He's even galaxies more well known than Larry Fink. And
Of course,
I got to tell you, I remember when I was in Puerto Rico, and I think it was in Puerto Rico, but I definitely remember David Bailey telling me that he might be able to get Larry Fink at the Bitcoin conference.
Yeah.
How does that blow your mind, Fred? Like, here we are with Donald Trump.
Donald Trump. Yeah. It's well, and then you add the next layer. So there's 3 layers that I've laid out already. So now a 4th layer is Donald Trump's choice for vice president is a wildly pro Bitcoin and crypto guy, right? In absolute, there is no version of JD Vance that has a negative thing to say about Bitcoin and crypto as an asset class. Has been a proponent for a long time.
One of the videos I think that I've just rewatched, because I remember watching it. I didn't remember. I didn't kind of associate it with him. Was the Gensler grilling that he did. And I forget when that was. 6 months ago, I don't know.
Whatever it was, and that was that's a good microcosm of what I just mentioned before of the connection between politics and finance, right? That's a real meaningful discussion about the connection between politics and finance. That where the money goes and where the money men go, that's where you want to be. And so you've got the totality of everyone meaningful in Silicon Valley that has a name that people would recognize. Peter Thiel, Elon Musk, Mark Andreessen, all of those guys. Those are people that you would recognize in Silicon Valley. They have all publicly come out for Donald Trump, right? They have publicly claimed we are endorsing this guy. Now you have a vice presidential pick that is going to be doing the blocking and the tackling associated with regulatory leadership and then regulatory navigating of the roads on a go-forward basis. That if you're a firm like Morgan Stanley or Goldman Sachs, you have zero reason to hold back the opportunity for people to purchase Bitcoin ETFs. Zero reason. If for no other reason, then you're in potential peril if this thing goes to 85 or 90 or 100K in the next 4 months. You have walled off a significant portion of your customer base from participating in that, and that would be a problem, right? So these are the things that people are talking about internally. Here's the other thing that I think is meaningful, very meaningful in terms of people wanting to be in the Bitcoin ETF product. I think there's a better than 50-50 chance that within a year of Donald Trump's next presidency and the adjustments in the regulatory world, that we're going to adjust the cash create mechanism for when you sell shares of the Bitcoin ETF, and it turns into in-kind distribution.
Yeah. So Eric Balchunas tweeted about that today. And he was like, because Hester Pierce said that's actually, it's on the table, right? Like, staking for this ETH ETF's on the table, and in kind is also on the table.
Yeah. So
So I don't know when. So your estimate is that might be on the table as early as 2025.
yeah, I think so. And because
Oh, wow.
how easy would it be for the likes of a JD Vance and a Donald Trump to say, okay, Gensler's out, a bunch of other people are out. Hester Pierce is the easiest choice on the planet to say, okay, you're now the chair of the SEC. Very
Yeah,
simple.
that would be amazing, right?
She's been there forever. She knows the
Yeah.
ins and outs. She's been there through the rough go and the easy go. And so that's an easy appointment because she's already there. You're not bringing somebody from the outside.
No
And
vetting. No vetting
yeah,
needed.
no vetting, nothing. It's just a check mark.
Yeah.
So think again. These are now.
I love that. That's a great call. Hester
Yeah,
Pierce, crypto mom, now
absolutely,
in charge of the
absolutely.
SEC. Okay.
Yeah. So
That would
these are tailwinds, significant tailwinds versus 6 months ago headwinds. The
Mm.
SEC was forced by a court to approve the BTC ETFs, but at the same time, they squeezed and needled and squeezed and needled to get cash create so that they could, for all intents and purposes, still control the proliferation of Bitcoin as something that can be held by individuals. Because if you buy a Bitcoin ETF, you're purchasing Bitcoin, but when you sell it, you're getting rid of your Bitcoin. They're going to give you cash back, right?
Hmm.
Um, that change, I think, would be just as big a deal in terms of assets that would be shoveled into that product as Goldman Sachs, Morgan Stanley, Wells Fargo, and all the other folks coming in a meaningful way online with
And just for some people who haven't been following, Larry Fink and company have all been they were all very in favor of that, right?
oh yeah,
They were not advocating for cash creates.
no, no, and they essentially acquiesced. Okay, I mean they, for all intents and purposes, acquiesced to the SEC because they knew that there was meaningful pent up demand for the product, right? They knew that they were going to get 15 to 20 billion dollars into the asset class itself, and BlackRock was going to, and Fidelity were going to be huge winners no matter what. No
Yeah.
matter how it was set up, they were going to get it because Bitcoin, as the word Bitcoin, is a brand, right? It's equivalent to in the 1950s, you started a Kleenex ETF, right? Like people
Mhm.
know the word Kleenex. It's a brand that's used for, hey, can you wipe your nose? It's Kleenex, right? So same thing with Bitcoin. So they're now that's
Right.
not going to be that's not going to be the case for Ethereum. That's an entirely different conversation. But Bitcoin, if you're able to turn the Bitcoin ETFs into a true pathway to owning spot Bitcoin, man, you talk about another level up in terms of capital that will find its way to Bitcoin. It's hard. Honestly, it's hard to quantify because what you would end up having is, instead of having a guy that's worth $125 million, and 3 years ago, the only way that he could really, in a meaningful way, own Bitcoin as a safe haven was to buy it on an exchange, take it off exchange, and hold it in cold storage. Well, all due respect, most of the guys that have $125 million are 55 plus, right? So their ability to understand seed phrases, to keep that seed phrase, to be able to do all of that was difficult.
Right.
Difficult. They might have to hire somebody to do that for them. Okay.
Which kind
The
of defeats the entire purpose.
Correct. So the Bitcoin ETFs having cash, removing cash create, and being in kind distribution, that opens up an entire new world associated with custody, right? That would open up custody opportunities. And by the way, there's been a small little regulatory thing that popped up, and legal thing over the past couple of weeks that is a precursor potentially to this, right? So
Hmm.
you have some banks that will be allowed to custody Bitcoin as an asset, right?
Yeah. Okay.
So
So let's stop there. So there was this bill that was vetoed by Joe Biden,
yeah, mm-hmm.
SAB 121 or whatever.
Yeah,
Yeah, and passed by both the Congress and the House, and then vetoed by Biden.
yeah,
But then there was this sort of an exception that was passed for like mega banks, or what
Yeah. So
was this is sort of
yeah, so basically the Federal Reserve created a rule, or again, I don't know the machinations of it because I'm not a regulator, but somebody that's really good to talk through this particular issue with is Caitlin Long from Custodian Bank.
all right. Yeah,
Um, but
one
they,
of my favorite accounts to follow, by the way.
yeah, but
Yeah.
um, they effectively carved out of that particular rule that was vetoed. They carved out, okay, yeah, so these particular banks are going to be allowed to custody Bitcoin, but we're not gonna approve this overall rule where everybody can. And if I were a betting man, and again, I haven't done this research yet, but if I were a betting man, I would bet that the majority of the authorized participants, okay, so the
Hmm.
authorized participants that handle the Bitcoin ETFs and handle the in kind to cash create process when somebody sells. So Goldman Sachs, JP Morgan, UBS, Citigroup, and a couple others. I bet everything I got that those organizations were given the exemptions to ultimately be able to custody Bitcoin. Why? Because those regulators that are about to be out on their ass when there's a change in the regime said, okay, let's create this so that these banks that love us and we love them are the only ones that can custody when cash create is changed and now it's
Hmm.
in contribution. So that's still some level of control. But here's the reality. Guys with 125 million bucks that are 62 years old, they would really, really like the idea of, oh, okay, I'm going to buy the Bitcoin ETFs. If I ever sell it, I'm getting my spot Bitcoin and it's going to be held at Goldman Sachs anyways. Oh, by the way, Goldman Sachs holds a meaningful position in a Bitcoin custody firm called BitGo. Um, so yeah, there's a lot of connective tissue here, Fred.
Well,
Um,
I think I think it's really interesting because you got to believe places like Goldman and
mhm,
Morgan Stanley, which have
mhm,
just been out of this game,
mhm.
and a little bit playing it safe. They're
Yep.
just sort of like, let's see how this thing plays out.
Yeah.
Now with the combination of a Trump administration,
Mhm.
potentially in kind uh,
Distribution.
distributions. Yeah.
Mhm.
That I'm not sure they have an option to kind of sit this one out the next year.
No,
Like, that could be a really, I'm not saying existential risk, but it could really set them back relative to their peers.
yeah, that's correct. And when one of them finally goes all in, all of them will go all in. And
Right.
you can't everything. Everything is commoditized on Wall Street. I mean, everything is commoditized. You're not getting meaningful adjustments in pricing on any product anywhere across these firms that compete with each other. Goldman Sachs and Morgan Stanley compete directly with each other. Merrill Lynch, UBS, they all compete with each other. So you're not going to get meaningful changes or adjustments to pricing or product opportunity with these firms. So the minute that one of these big firms makes the adjustment to their current policy of siloing Bitcoin ETFs in the private wealth management level of their firm, the minute that happens, all of them will do it.
Right.
All of them will do it. There'll be a few that will hold out, like maybe an Edward Jones or whatever, but that's just because Edward Jones doesn't matter when it comes to Goldman
Right.
Sachs. Edward Jones banks and does wealth management for the mass affluent, not high net worth folks. So different category altogether. Anyways, point being is that the tailwinds that exist versus 6 months ago are 40 mile per hour winds, whereas 6 to 12 weeks ago we were looking at 25 to 40 mile an hour headwinds, right?
Right.
That's what we were looking at. Let's call it 6 weeks ago now, or maybe 8 weeks ago now. Everyone was convinced Ethereum ETFs were going to be denied. I mean, it was written
Yeah. Me
almost in
included.
stone.
Me
Yeah,
included.
absolutely me included. I was being told by legal at the issuers themselves that they were going to be denied. You know,
Mhm.
told that unequivocally. So they didn't even know.
Mm-hmm.
And the reason why it's taken so long for them to potentially finalize 19B4s and S1s is because nobody was ready. They were all convinced they were going to be denied.
So
So
what about JP Morgan? Now we have we have this this I don't take it too seriously, but this idea that Jamie Dimon might be the next chairman of the Secretary of the Treasury.
Yeah,
Uh,
I don't know. I would say that that's an interesting headline that people will click on. Jamie Dimon's a well-known guy. He's more well-known than Larry Fink,
mm-hmm.
world of finance and banking. So he's a name that you can put into a headline and it's going to get clicked. It's the cross section of politics and finance, which we've talked about here. I don't
Jamie,
think
but JP Morgan's more than any other firm has benefited from the interest rate policy of the sort of the COVID pandemic. And look,
correct.
they're charging, 0.5%. They're giving people 0.5 point of interest, and they're taking that money and putting it in T-bills at
they're
over
enjoying
5%. I mean, this is the biggest theft, not theft, but
yeah.
it's the biggest legal arbitrage that I've ever seen in the history of Wall Street.
Well, what has happened? It's the fleecing of retail.
Yeah, it's the fleecing of retail.
The fleecing of retail used to be fees associated when you had a negative balance in your account. Well, there was laws that were passed that made that less tenable. Like you have to stop doing that, guys. You can do it some, but you can't do it, in perpetuity. You can't make $1 billion a quarter off of late, right? You're not allowed to do that anymore. So how do they adjust and make $1 billion to replace that? Well, you do it by paying 0.5% on savings and checking accounts and making 5% in treasuries
and business accounts, right? I mean, that's like you're a medium-sized business.
Correct.
There's only so much money you can park in regional banks these days,
right?
And because the Fed's sort of saying like, we're it's up to you, but if I were you, I'd put your money at JP Morgan.
Right.
Like that's basically what they're saying.
They've gotten bigger and bigger and bigger and bigger. And by the way, I've done a lot of business with and around JP Morgan folks. Let's put it that way. I've spent a lot of time with JP Morgan wealth management folks.
Yeah.
And I've watched those people leave that organization and go to other more meaningful wealth management organizations. Why have they done that? Because JP Morgan's wealth management division and the way that that's all set up, their private bank, it stinks, man. I'm just telling you right now, they sell crappy products that are JP Morgan products that generally underperform all of their peers. It's just the name. Right. People are comfortable with the name because it's the biggest, and they know that there's no way, no matter what happens, will any government anywhere allow JP Morgan to go down. But in terms of product and performance, JP Morgan as a wealth management organization is garbage. You want to have your money at Goldman or UBS or Morgan Stanley. You don't want to have it at JP Morgan.
Right.
But they do exceptionally well because JP Morgan, the brand, right? It's the banking brand that's equivalent to Bitcoin as the brand in quote unquote crypto.
Let me ask you this, because I posted a little thing on this a while ago, but I really, Bianco has been all over this, which is like, he's like, Fred, these advisors they haven't really stepped up to the plate. It's just, he calls them degens. So I just think that's just like, calling a retail investor at Schwab a degen because they're buying the Bitcoin ETF is just, I don't know. It's a little duplicitous in my view. And he sort of was like, no, I'm not going to call them degens anymore. But he has a point that the advisors have not really picked up yet, right?
Well, they can't. I mean, they're not being allowed to. They are having to navigate at minimum two gatekeeping processes
Right.
to put customers into a Bitcoin ETF.
Okay.
One, it's not readily available to 80% of customers at a Merrill Lynch or UBS. A
Right.
customer that has a $7 million portfolio at Merrill Lynch cannot purchase a Bitcoin ETF right now. Not allowed. They
Yeah.
have to have more money at the firm. And even if they have more money, their advisor is not allowed currently to go to them and say, you need to add this to your portfolio. The customer has to see Larry Fink on TV or a Bitwise commercial and go to the advisor and say, I want this in my portfolio. Which, by the way, if you're somebody that has $11 million long at Merrill Lynch or UBS, you're kind of preconditioned that the three-person wealth management team that you work with is supposed to be the people that tell you what to do with your money. That's
Yeah.
the whole point, that you're paying 75 basis points a year to have them do that. Why would you be the one making the decisions instead of them? You're
Yeah.
paying them to do that, right? So it's really two and a half sort of fences that you got to get past. It's mental and emotional, and then there's
Right.
actual things that are stopping you from doing it.
Right.
Those are going to be removed though, and then you're going to have an asset class that is up 115% over the past 52 weeks, that is now going to be part of the conversation when people sit down and do their quarterly reviews of their accounts.
So when do you think? When do you think first Morgan Stanley
Wells
and
Fargo.
Wells Fargo hit, and then secondarily, when do you think Merrill hits?
I think early August would be my best guess for Morgan Stanley and Wells Fargo, and then I think, you know, Merrill Lynch. We're probably talking about early next year for Merrill Lynch.
Okay.
Merrill Lynch. Merrill Lynch isn't Merrill Lynch. Let me make this clear.
Hmm.
Merrill Lynch is a division of Bank of America
That's right.
and a small division of Bank of America. Okay, so
Right.
Merrill Lynch isn't making its own decisions.
Right.
Anyone know who the CEO or president of Merrill Lynch is right now? Nope. Nobody. Why? Because it doesn't matter. The only person that matters at Bank of America is Brian Moynihan, who's the CEO of Bank of America, and the
Right.
board. That's all that matters, right? So Merrill Lynch is not the thundering herd that it was 20 years ago in the previous 50 years that led the wealth
Right.
management. That's gone.
Yeah.
2009 changed that forever. They are
Hmm.
doing Bank of America. It's more important. Morgan Stanley, Goldman Sachs, and Wells Fargo and UBS are much more important flag bearers of wealth management and client flows, retail
Right.
flows into Bitcoin ETFs than Merrill Lynch.
Well, Wells Fargo's is pretty huge, and they've got this enormous channel.
Mm-hmm. Wells
In
Fargo is huge. They have two different wealth channels. They have a traditional quote unquote wirehouse channel, and then they have a
right.
really independent channel that pays
Yeah.
people 90% of their payout as opposed to 50. So they have a ton of advisors. Morgan Stanley has 18,000 advisors.
Right.
Between the two, you're talking about 30,000 plus advisors that on average, have 400 to 500 clients, and their account size on average is going to be $1 million to $1.5 million. So you're talking about billions of dollars with potential access to Bitcoin ETFs. And unequivocally, and I will not stop saying this until it's completely untrue, the reality is that you're talking about when people allocate to quote unquote crypto on a go forward basis, it will default to the Bitcoin ETF because trying to tell the story of Ethereum as a secondary opportunity will be very, very difficult. Very difficult. It will take lots of time. So, yeah. Yeah.
Yeah. Okay. So you're do you see it kind of a late sort of election kind of rally? What's your if you had to guess in terms of the timing for kind of how all this stuff pulls together? this sort of wall of money? Is it do we start really seeing much more meaningful numbers in Q4, do you think?
Yeah, no question. I think
Okay.
there's increased allocation. 13Fs are going to come out, by the way, over the next 15 to 30 days.
Okay.
The Q2 13F deadline is already passed, but they have a 45-day window to report. So we're going to see 13Fs come through. We're going to see some big names and some bigger allocations from different institutions and family offices and all of that stuff. But I think the next wall of money is going to be the opening up of wealth management organizations. And again, I think that when you get away from, sell in May and go away, once we get past Labor Day,
Yeah.
I've said, and I've been very conservative. People call me a bear, which is funny. But I've said, we're at 80K by the end of the year, and we're probably at 150K plus by Q2 of next year.
Okay.
I think that's just meaningful, reasonable money flow
Right.
and supply associated with limited supply of Bitcoin. There are no more boogeymen left.
Well, we still have Mount Gox a little bit.
Well, that's what I'm saying. I was just about to say, after we get through Mount Gox, there are no more boogeymen left. There just aren't. There's not another FTX out there. There's not another Mount Gox out there. There's not another Germany out there. None of this is out there anymore. It's all gone. All that's left is supply and demand. And we know without question that demand is only going to increase. It's only going.
Well, there was that also another thing that was interesting. They had a stat on people who own the ETF. Which percentage of them decreased their allocation? Which percent increased? I think it was like 78% increased.
Well,
so people are putting a little bit in right now, and it's not like they're done at all. They're just sticking their pinky into the pool.
This, Fred, and this is something that's not normal in the quote unquote crypto space. But folks that are 50 to 90 years old, they have trained, and the outcomes have been, unassailable. That you buy low. When there's blood on the streets, you buy. You don't sell. They have been trained for 3 decades now that never stop buying, don't sell. Every time there's a new narrative that says, oh, maybe you should get out of the market. Oh, you're scared by interest rates. Oh, you're scared by, what? Hey, a year ago, wasn't commercial real estate supposed to basically decimate the world economy? No, that didn't happen, right? No. So these narratives have happened every 6 months for 30 years. So the investor class has been trained their entire adult life to not sell, buy and hold, buy and hold, buy and hold. So why would that change with the Bitcoin ETF? Why would it change? A guy like Bianco, who thinks people are going to pop in and pop out, or a guy like Peter Schiff, they're going to pop on and then they're going to sell. They're not being honest. They don't understand. They're choosing not to talk about the realities of the investor class. That is not how they handle assets that they make allocations to. They do not buy and then immediately sell. They don't do that. They never have and they never will. They just don't. So there's not going to be.
Bianco's view is, I'm kind of paraphrasing what his view is, but I talked to him like for an hour the other day. So I think his view is, Bitcoin's kind of sort of a vaguely interesting trading asset, but it's trading in this like 3-year range, and 70K is the top. And as we get kind of closer to 70, people are going to sell out. It's never really going to break over 100. That's his view, right? He's got this world view that none of this stuff's really that transformative. That he really does not have the view that I think you and I have, that we're going to come back 5 years from now and Bitcoin is going to be in the hundreds of thousands of dollars, several $200,000, $300,000, $500,000, and it's going to be, just deeply ingrained in all aspects of the financial world, right? You and I feel that way. Larry Fink feels that way, but there's a lot of guys like Bianco who don't feel that way. you know?
I would invite Mr. Bianco uh, to have that discussion in a. I just don't think it's serious because he's taking the opposite trade as Larry Fink. That's dumb.
Yeah.
That's just dumb. Like nobody has ever taken the opposite side of BlackRock and Larry Fink and won and
No.
been right. They never have. Not to mention everyone that has been
It's
anti-Bitcoin.
like playing, it's like challenging Magnus Carlsen to a chess game. You're
Yeah,
not going to win. You're
you're
not
not
going to win.
going to win. You're not going. You're just not going to win. And
Yeah.
Bitcoin as an asset has made fools of people like Bianco for a decade.
Yeah.
Have made fools of them for a decade. Who were the speakers at the Bitcoin conference 3 years ago in 2021? They were the Max Kaisers, they were the Michael Saylors. There wasn't a political guy or a traditional finance guy.
Kelly.
Yeah, yeah, okay. And maybe a Mark Yusko, right?
Yeah.
Who's kind of a feet in TradFi and a foot in crypto. That was where are we at now? You've got, an entire Republican Party that's at the Bitcoin conference. The
Yeah.
most well-known human on the planet speaking at the Bitcoin conference. So my question is, Bianco, with all of that reality, you've got lined up Larry Fink, a party that's going to take over Washington, D.C., and the world for that matter, and you're bearish on
Well,
Bitcoin?
okay. So one of his reasons for being bearish, actually, right, is this cash create stuff, right, and
Okay.
cash redemption. Because his
Mhm.
view is, okay, you've made it into a Wall Street asset, and it needs to be more of an actual transactional tool, right? Now, if we get this in kind redemption, right,
Mhm.
that allows me to much more seamlessly move money between my multi-sig setup or my single sig setup
Yeah.
and my ETF, right? and
Mhm.
and so how do you okay, so let's try to imagine how that happens. Okay, so let's say I want to buy IBIT a year from now, right?
Mhm.
Okay, I go to the BlackRock website, and then there's there's a it says, okay, sign in, generate a QR code, send in my Bitcoin. Okay, I'll send in 10 Bitcoin. Great. You got some you'll get you'll get your ETF in your account next week, tomorrow. Is that
Well,
literally how it's going to be?
no, you're going to make the purchase with cash.
Well,
Okay.
what if I want to make the purchase with an ETF with a Bitcoin?
I don't know. I don't know if that ever comes to fruition. Maybe it does. There's probably a different lane on that same
Okay.
aisle,
I
and that
think
different.
there is such a thing for this Hong Kong ETF. I think it's got, I don't know, it's got like maybe 100 Bitcoin in it or something.
Well,
I don't know, but like,
Bianco is betting everything on black based on an asterisk. Literally, what you're talking about cash create is an asterisk against the tidal
right.
wave that is the current, movement of Bitcoin right now.
Right.
So,
Okay.
I mean, good for him. I don't know what he's trying to get accomplished. He
Right.
runs a Bianco research, and it is what it is, and part of that is eyeballs and clicks and all that stuff. So okay, that's fine.
He's
You
got a
got
bond. He's got a bond ETF of his own too.
Yeah,
Right.
right,
Yeah.
right. So and as you and I know, what a bond ETF would be from a correlation standpoint would effectively be the opposite of a growth investment like a Bitcoin ETF.
Pretty much.
Um, but there's a place for that, right? There's a
There
place
is.
for
There
deeper
is.
portfolios. So good for him.
Okay.
I literally disagree on every point with that guy.
But there are a lot of Biancos out there. There's a lot of guys who have that viewpoint and who need to be converted. Who they're looking at Larry Fink, and I think they were just in disbelief because there's this guy that they've sort of agreed with along the way, and now he's sort of saying these crazy things, right?
Yeah,
So
there is. I'll give you a real world example. So maybe a year and a half ago, I was watching a stream, a guy that I love, a guy that I know,
Okay.
Josh Brown. He's a well-known RIA. He's the CEO of a Ritholtz Wealth Management, RIA,
Okay.
$4 billion RIA out of New York City, and they got offices across the country. Great guy, great commentator.
By the way, is Barry still alive? Is he Barry Ritholtz? Is he?
Oh yeah,
Yes.
Barry Ritholtz. Yeah,
Okay.
yeah.
I used to follow that guy like religiously.
Absolutely. Yeah. So Barry
And
is.
I just kind of his name is not,
Yeah. Well, he's gotten older, so he's pulled back.
Yeah. Okay. Right. Yeah.
But that is his firm. That's Barry's
Right.
firm.
Right.
Okay. So, Josh, I love Josh's opinions. I love his
Right.
style.
Yeah. Yeah. I'm familiar.
They have a
Yeah.
great podcast. It's
Right.
way rankings and financial podcast.
Yeah,
So
he's great. I
yeah.
agree.
So, but a year and a half ago, he's basically like, Coinbase isn't worth anything. Like, it's a commodity business. Why would why would you buy that stock? Like, it's foolish. Like, they don't do anything. Like, where is that going to go? Well, he was just flat out wrong, right?
Right.
Like, flat out wrong. It has gone more than up and down. It has gone parabolic since then. So the point I'm making is nobody's always right. Nobody's opinions are always unassailable. People are often wrong 50% of the time. You and I could be wrong.
Yeah.
There may be something.
We were wrong on the Bitcoin ETF, the ETH ETF. We were wrong.
Yeah, we're correct. So, people are going to take positions that are right or wrong at times. Listen, I said that Morgan Stanley was going to come online in late May. Why did I say that? Because the issuers were telling me that, right?
Right.
But
Right.
the issuers were wrong, and I was wrong. But we were wrong. So you make
Well,
adjustments.
nobody's got the timing perfect, but it does sound to me, based on what you're saying, that things look more imminent than they used to.
Yeah.
And now that we have a bunch of these things moving in this kind of common direction, it does seem this is yet even more fuel to add to the fire.
Correct.
Yeah.
Well, and the
And
fire.
probably an interest rate cut in almost certainly in 60 days,
September.
right? So we're gonna
Correct. You're correct across the board. The tailwinds now are significant. And oh, by the way, when you have, and these aren't often seen, and they aren't often noticed by the larger public, but I'll bring them up here. When you have the CEO of a Bitcoin ETF company making somewhat a cryptic tweet, Hunter Horsley did this the other day, talking about what if we have tailwinds associated with these products in crypto on a go-forward basis. He knows way more. He is way deeper into the regulatory environment than even you and I could be if all we did was try to talk to that world every day, right? So he knows more. He knows what the next 90 days look like. He flat out knows what it looks like. So, yeah, I think it's. I think we're at the best spot right now. People should be buying Bitcoin, as much of it as they possibly can, because when we finally come into September, October, November, I think we're going to see a real movement to the upside, and we're going to have the election. The election's going to happen. Short of something crazy happening, we're going to see a regime change, and that regime change is going to be pro Bitcoin, pro crypto. And we've never had that here in the United States. It hasn't even actually existed, because the previous time that we had a less regulatory committed regime, crypto was in its infancy. Like, we were still talking about ICOs and crypto Twitter guys that have long since moved on.
Right.
We have,
we were talking about the block size wars almost.
Correct. Yeah, correct. Roger Ver was a meaningful person in the world of Bitcoin and crypto, right?
Mm-hmm. Yeah.
He's been, walked off into the dustbin. So yeah, we're in a spot where, again, if you believe that there is a more friendly environment for Bitcoin to move higher, I look at Tom Lee, right? Thomas Lee, and the firm that he runs from a research standpoint.
One of my most favorite Wall Street analysts, I think.
He's fantastic. The guy has been right about the price of Bitcoin for forever. Timing wise, he may have been off, but he has been right about it going higher and higher and higher
Yep.
and higher every time.
100%.
And
And stocks, by the way, also.
yeah, and he predicts 150K Bitcoin. Now, whether or not that's at the end of this year or if it's at some point next year, who cares?
Yeah.
Buy Bitcoin. It's not going to 35,000 from here. It's just not. The architecture around it for people to buy it and hold it, it's too strong. It's just not. I stake everything on that. I would.
All right, Andrew. I linked. So Andrew, you've got some, like me, some imitators.
That's correct.
So I put your Twitter handle there, AP_abacus. There's a bunch of fake abacuses as well. So
there we go. You got it right, my friend. You got it.
Good. Yeah. Love so there's a bunch of fake ones. So make sure you click on the real one and follow him. And Andrew, thanks a lot, and we'll check back with you in a bit and see how wrong we were.
I appreciate
All right.
it.
Thanks, Andrew. Bye.
Bye.